The new energy battlefield is a river of blood, and the traditional titans are cutting off their own limbs to survive. This isn't a bankruptcy liquidation, it's a far more decisive act of self-dismemberment. When a publicly listed company becomes a net negative asset, how does its parent company perform the spectacular magic trick of shedding its baggage while simultaneously launching its new favorite child? Hello everyone, today let's dive into something that is both hardcore and surreal. The protagonist is one of China's old guard auto giants, Dongfeng Motor Group. And recently, they pulled off a maneuver on the Hong Kong stock market that was so audacious it's being called a combination of the golden cicada shedding its skin and a backdoor listing. It left both market watchers and casual observers completely stunned. In simple terms, the parent company, Dongfeng Group, is packing its bags and leaving the Hong Kong Stock Exchange via privatization. At the same time, it's taking its most prized asset, the premium EV brand VOYAH, and giving it a grand debut on that very same stage. So why is Dongfeng making such a seismic move? To put it bluntly, it's a midlife crisis colliding with a massive industry upheaval. The old revolutionary has met a new set of problems and it needs a new way to live. First, let's look at the state of the old guard, Dongfeng Group. Its latest report card is like watching a once dominant boxing champion now stumbling around the ring. Sales are down, profits have collapsed by a staggering 92%. The cash cows of the past, its joint ventures with Nissan and Honda, are running dry as the combustion engine market implodes. Even worse is its treatment on the stock market. The share price has been scraping the floor for so long, with a price-to-book ratio as low as 0.25. That means for every dollar you invest, you're buying $4 of assets on their books. The market isn't just undervaluing it, it's treating it like scrap metal. The listing has become useless as a financing platform. But does Dongfeng have a hidden ace up its sleeve? Yes, its own child, VOYAH. Born in 2018 as a high-end EV brand, VOYAH has been on an absolute tear. Sales are skyrocketing, with its luxury MPV, the Dreamer, becoming a dark horse bestseller. Financially, it's on the cusp of profitability. In the bloodbath that is the current EV market, VOYAH is the perfect child every parent dreams of. So Dongfeng has a problem. Its old publicly listed shell is worthless, but the new dynamic asset inside it is full of potential. What do? Dongfeng's solution? Split the family. And that brings us to the series of moves that has market watchers exclaiming, now that's how you play the game. It's a three-part symphony of financial engineering. Part 1, the red envelope. Dongfeng Group announced it would distribute its nearly 80% stake in VOYAH directly to its own shareholders. It's like the boss at the annual party, instead of giving out cash bonuses, is giving everyone shares in the company's most promising new venture. Part 2, the debutante's ball. With those shares now in the hands of the public, VOYAH will immediately be listed on the Hong Kong Exchange via a listing by introduction. Now, this isn't a typical IPO. An IPO raises new money. A listing by introduction doesn't. It simply takes existing shares and puts them on the market to be traded. It's fast, cheap, and doesn't dilute ownership. It's like throwing a debutante ball for VOYAH, telling the world, look at our rising star. From now on, the market, will determine its value. With an estimated valuation of around 40 billion RMB, VOYAH is a respectable mid-size growth stock. Part 3, the father's retreat. After spinning off its prize son, the old parent, Dongfeng Group, will exit the stage. It will use a combination of cash and the newly listed VOYAH shares to buy back all of its own publicly traded stock at a premium. Once that's done, Dongfeng Group will be a 100% privately held company. Strategic motivations. What's the end game here for everyone involved? For the shareholders, they get the best of both worlds. A cash payout for their old stagnant Dongfeng stock, plus a lottery ticket in the form of shares in the exciting new EV company VOYAH. For VOYAH, the sky is the limit. As an independent, publicly listed company, its brand image is instantly elevated. It now has its own platform to raise capital for the brutal R&D and market expansion wars ahead. With plans to expand to Europe, having the validation of an international stock exchange is invaluable. And for Dongfeng, it's finally free from the shackles of the public market. No more quarterly earnings pressure, no more worrying about a tanking stock price. It can now undergo a painful, necessary internal restructuring behind closed doors, cutting old, inefficient production lines and pouring all its resources into its new energy ventures. This is a strategic retreat, a deep squat in order to jump higher in the future. Risks and challenges. Of course, a move this audacious is fraught with risk. The pressure on VOYAH now is immense. Every flaw will be magnified under the public spotlight. Can it sustain its sales growth? Can it achieve technological breakthroughs? Can it survive the price wars? And for Dongfeng, after going private, transparency will decrease. Can it truly reform itself without the discipline of market oversight? Will it become a stagnant fiefdom? These are open questions. And looming over it all is the industry itself. The EV space is not a red ocean, it's a sea of blood. Tesla and BYD are the twin mountains, and a horde of new and old players are engaged in a brutal war on all fronts. Can a newly independent VOYAH carve out a path to survival? Dongfeng's golden cicada maneuver is in essence the difficult pivot of a state-owned giant in an era of radical change. It is a bold, imaginative, and uniquely Chinese display of capital strategy. Other legacy automakers still stuck in the combustion engine mud are no doubt watching with intense interest. But capital wizardry, no matter how clever, is just an amplifier. The ultimate fate of both VOYAH and Dongfeng will be determined not by stock codes, but by the tangible quality of their products, their technological barriers, and the experience they deliver to their users. So is this move brilliant? Absolutely. But behind the brilliance is the desperate, determined struggle of a massive ship trying to turn itself around in a historic storm. VOYAH has been launched. Dongfeng has gone into retreat. Will VOYAH soar and carry the new Dongfeng to a rebirth? Or will it falter, leaving the old giant's transformation half-finished? Let's grab our popcorn, because in this surreal era, any company that dares to take a knife to itself is at least a little more hopeful than one that simply lies down and waits to die. A poet of our modern age might say of this moment, "The capital game a path of twists and turns as an old empire's dying fire burns. It leaves the stage its old life cast aside to hide its shame and plan a future tide. A fledgling eagle now is set to fly with shareholders' gifts that money cannot buy. Don't laugh and call this strategy absurd. Two plays at once, a story yet unheard." That's all the time we have for today. Thank you for listening, and we'll see you next time.